Have you ever wondered how business headlines could potentially impact your real estate investments? Well, wonder no more. Welcome to our weekly roundup, where we sift through the top financial and business news, examining their potential ripple effects on the financial world and real estate markets. From Wall Street to Silicon Valley, we've got you covered. So whether you're a seasoned investor or just curious about the world of finance, there's something for everyone here. Stay tuned as we dive into the most impactful headlines of the week. Ranking the headlines isn't as easy as it seems. It's not a popularity contest, it's about potential impact. So, how do we decide which headlines make the cut? Well, it's a mix of financial acumen, a dash of foresight, and a whole lot of coffee. First off, we're looking for stories that have the potential to shake up the financial and real estate markets. These could be anything from a major merger announcement to a change in housing policies. It's like playing a game of chess with the economy. We're always trying to think a few moves ahead. So, let's get into it. At number 5, we have the news of a significant merger between two tech giants. Now, I know what you're thinking. What does that have to do with real estate? Well, this could lead to a potential tech boom in the city, where the new headquarters is set to be established, leading to an increase in housing demand and property prices. Now, moving on to number 4. Here we have the announcement of a new housing policy that aims to make homeownership more affordable. This could be a game changer for many potential homeowners, but we'll have to wait and see how it plays out. In the third spot, we have the news of a major bank announcing a drastic cut in interest rates. This could have a significant impact on mortgage loans, potentially sparking a surge in real estate investments. For our second spot, we've got the news of a significant rise in inflation rates. This could be a cause for concern for investors, as it could potentially affect the value of their investments. And finally, at the top spot, we have the news of a major tech company announcing a huge investment in sustainable housing technology. This could revolutionize the real estate market, making sustainable and affordable housing a reality for many. Now that we've set the stage, let's delve deeper into these topics. Headlines are just the tip of the iceberg. There's always more beneath the surface. So, let's dive deeper into our top-ranked headline of the week. A seemingly ordinary piece of news, but with potential implications that could ripple through the financial and real estate markets. This week's top headline revolves around the central bank's decision to raise interest rates. Now, on the face of it, this may seem like a purely financial matter, but let's take a closer look. Higher interest rates can mean a lot of things for different sectors of the economy. For savers and investors, it's generally a good thing. It means more return on their savings and investments. But what about for the real estate market? Well, that's a different story. Higher interest rates can make mortgages more expensive. This could lead to a slowdown in the housing market, as potential homebuyers might be less inclined to take out mortgages. Conversely, for those in the rental market, this could be an opportunity. If fewer people are buying homes, it could lead to increased demand for rental properties. Property investors could potentially benefit from this. But here's the twist. Real estate isn't just about buying and selling properties. It's also about construction and development. Higher interest rates could impact these areas too. The cost of borrowing for construction companies might increase, potentially leading to a slowdown in new developments. And let's not forget about the technology sector. Any changes to the financial landscape can have a domino effect on tech companies. Many of these businesses rely on venture capital and loans to fund their operations and growth. If those become more expensive, it could stifle innovation. Remember, the devil is always in the details. It's essential to look beyond the headline to understand the broader implications of any news. Not everything that glitters is gold, and not every headline is as simple as it seems. A headline is a door to a broader discussion. Let's open the next door. Ready for another deep dive? Let's plunge right in. Our second-ranked headline is quite the firecracker. The Federal Reserve's recent decision to hike interest rates is shaking things up, and not just for your morning latte. This move is a response to rising inflation, which has been a hot topic over the past year. The Fed is essentially putting on the brakes to slow down the economy and curb inflation. But what does this mean for the financial and real estate markets? Well, higher interest rates mean increased borrowing costs. For businesses, this could tighten their budget belts, leading to less investment in growth and potentially dampening stock market performance. For the average Joe and Jane, this means loans and mortgages just got a bit pricier. Now, let's pivot to the real estate market. Higher interest rates can put a chill on the housing market. Mortgage rates are directly tied to the Federal Reserve's decisions. When rates go up, the cost of buying a home increases, which can slow down demand. This can lead to a cooling in house prices, a welcome relief for those who have been priced out of the market. But it's not all doom and gloom. Savers might actually benefit from higher interest rates. If you've been diligently stashing away your pennies in a savings account, you could see a bump in your earnings. And remember, this is part of a bigger picture. The Fed's decision is a balancing act, aiming to keep the economy on an even keel. So while there might be some short-term pain, the hope is for long-term gain. 2 headlines down, 1 to go. Brace yourself for the final round. Last but certainly not least, our final headline of the day. We dive into the world of technology, where innovation and finance often cross paths. Recently, there's been a significant development that's been making waves. Let's delve a little deeper. This headline chronicles the rise of a new technology that could revolutionize the way we approach financial transactions and real estate investments. Imagine a world where complex transactions are simplified, where red tape is cut with a single click. This technology promises just that, and it's not science fiction, it's happening right now. This technological advancement could potentially reshape the landscape of the financial and real estate markets. For real estate, it could streamline property transactions, making them faster, more secure, and less prone to human error. This could potentially lead to increased activity in the market, driving up demand, and subsequently, prices. For the financial market, this technology could mean increased efficiency in trading, lower costs, and greater accessibility for everyone. It could democratize the financial world, making it easier for the average person to engage in investing and trading. However, as with any new technology, it's not without risks. It's important to keep an eye on the developments and understand the potential challenges it could bring. And there we have it, the week's top headlines and their potential impact on your investments. Remember, knowledge is power, and in this case it could be profitable too.